Good day, all. Ira Epstein with your metals market video, and this is for Wednesday, the 15th of May, 2019. Before I get going, I have a favor that I'm going to ask of you. And no, I'm not asking you to get into your pocket with money or a credit card. You know people that might like to see these videos? You want me to keep doing them? Need more viewership? You're my best source. Do we understand that? You're the best source. If you think they're good, other people will think they're good. If you don't like them, obviously don't tell anybody about them. That's it. So let's talk about the metals, because what's really going on is you took the air out of the market because we've gone back to this headline market. Now, what do I mean by that? It appears you start off the day one way, you go the other, because now the president's not going to put tariffs on European autos just yet, or Japanese. That's a big deal. He's going to wait, from the looks of it, 6 months. He's trying to get the Mexican-Canadian treaty done with the U.S., but the Democrats are probably going to give him a hard time, although they have their own problem. Mexico has done everything asked of it by Miss Pelosi, at least as I see it, to get this deal done. Vote for the deal. It helps the United States. It's not about politics, because President Trump's put a deal together. We then get the inflation ideas. Now, what do I mean by that part for you? You know, I was just coming off the floor in Cow Guy, and I'm sure a lot of you see him on all the stations. We're pretty good friends. And we're talking inflation, and he's going on, and I'm going, I think it's coming. But I think it's coming for tariff reasons. So I think the Fed will let it come because they're trying to get their 2% number. Understand accounting, FIFO, LIFO. There's two ways that you do accounting. First in, first out, last in, first out. Which one do you want to do? So inventories have been held by retailers and so on. They have stockpiled. We saw that in each of the economic reports. So right now, with the tariff wars going on and all this, they're still digging in and getting what goods they can. Remember, everything on a ship right now that comes in is still at the lower tariff. They've got those goods. The 25% and whatever other tariffs are going to come in are felt after this. But first, the inventory. That's when I start seeing day-to-day inflation. Right now, a family of four, $767, according to the government, is what the cost of the tariff is at this point, raw cost. Then you got to go to economies. What's that mean for it? I'll go on and on. But in the metal markets, we don't seem to be popping very much. And when we come to the gold market, I think the reason is, if you look at a weekly chart, we're getting into that zone where I told you the first resistance should show. And that number is 1298.30. That's the 18-week moving average of closes. And if you'll notice, as you're approaching it, the momentum of the market has slowed down. For the week, we are up $9. When you go to the daily bar chart, you've climbed, you made your most recent high yesterday, you fell back, you made from there, market fell a little bit. So what we have is a higher high, and we've had the higher lows, higher highs. You're in an uptrend in the gold. In terms of moving averages, I had pinpointed, when we'll come back just like this, market was running up. The question is, where's the resistance? You know I'm always going to look at a Bollinger Band, but we have moving averages first. I think because you cleared the 18, the possibility, I can't say it's going to hit it, is the 100-day, 1302.80. You go up, you hit it yesterday, and today you fall away from it. What about Bollinger Bands? They're right there too. So this is your resistance area. It's not a trend changer. You hit a resistance zone. What about momentum? That's the problem. You're overbought. So you have a market that's hit upside targets, it's overbought, and it's not getting more bull news just yet. It needs another piece. You would have thought possibly this morning that hearing that the U.S. is pulling out non-essential personnel out of Iraq, that sounds to me like war talk, any way you want to go about it. I don't care. You don't do that unless you're suspicious that something's going to happen. And who's their next door neighbor? Iran. When you look at GLD, same thing. You're fighting the battle at the 100-day, the upper Bollinger Band. You're overbought. Yes, you're in uptrends. You're in resistance zones as well. Now the miners, the question is, would they have enough zip to get up to the Bollinger Band, or are they going to fall right through here? I don't know. The first support comes in at 2069. If you take out 2059, just hit 2058, you break this uptrend. You go back to a higher high, lower low pattern. So this is the battleground that's happening. The good news is the market is still in an uptrend, higher lows, higher highs. Momentum is not turned down, and the bias is up. The question is, can you get a pop to 2130, or do you fail, like I said, at 2059? The gold-silver ratio is so far showing no sign that it's gotten ahead of itself. It got up to this 88 level, which is a monster number, and it's still basically there. When you go to the silver chart, you're not trending. You have a higher high and a lower low. You're stuck in a somewhat downtrending slope from the upper and lower Bollinger Bands, and momentum is as flat as can be. On this chart right now, to get bullish, and it can happen, you need to get a close over 1488.50. That would give you the potential on this pattern, higher lows, higher highs over that number. Then if the market saw momentum pick up with it, the possibility exists of making a run to the upper Bollinger Band. Let's flip-flop. Let's assume it doesn't do that and it slips back. Well, the next support is back down at 1464, the lower Bollinger Band, but it cannot turn itself on this pattern into a bear pattern right now. In the copper market, it's a bear pattern. You've got lower highs, lower lows. Now, what about this momentum? If we take a look at the slow stochastic, both numbers were under 20 today. They were both under 20 yesterday, both the day before, not the day before. You're embedded. When you first embed, the risk is, does it stay embedded? Therefore, any rallies in this market, and you did close near the highs of the day, I still say if this market doesn't lose that embedded reading on even a 200-point rally tomorrow, the bears might come out of the woodwork at it and then see what they can do in driving it back down. If you lose the embedded reading, then the resistance numbers come into play right here. But there's something else at work. You just had a bearish crossover where the 18-day got under the 100. Often, I don't use the word always, often, that means that should make a lower low on this current level to satisfy that crossover if it's a real one. We'll see if that comes out. Everything I see on the chart is still bearish. In the platinum market, so here we have a market that's getting oversold. This is the action of today. Where do you think the market went? That's why I brought it back. Here's the 100-day average of closes. Look at how this number was acting as support here. Numbers that were previously acting as support might still do that. But I look at the combination of the 100-day and the lower Bollinger Band as being that potential, and that's where you went today. Trend down, momentum down, oversold. Palladium market. Let's go back to yesterday. You have a market in a downtrend, lower highs, lower lows. However, you also have a market that's oversold. All right, any number under 30 means the market is oversold. So it can rally a bit from here to get rid of it. The way you correct an oversold condition is you either rally or you drop and embed when you're in a downtrend. It's one of the two. What the market did today is it put out an outside day up. In the process of that, you got out of the oversold condition. In the process of that, if you had taken out 1353.90, I would have said, higher lows, higher highs, and maybe a close over that would be good. Instead, it stopped shy. So if you take out today's low because it was an outside day up, it puts in a high probability that the market's going to make a run for the lower Bollinger Band. If the market's going to continue on its way up, the two resistance points as I see them are the 1354 level, the 18-day average 1361. But to get to those numbers, you've got to take out 1353.90 roughly, and that will give you back into an uptrend right into that resistance. Close over both those numbers, and maybe the bull play comes back into work now. Where's the dollar fighting? Remember how often we say that 18-day average? And the dollar today was an ugly chart. I did not expect this high of 97.49 today to be taken out. I thought the market was going to keep the pattern of lower highs, lower lows, and fail against the 18-day average of closes. I know it doesn't look like it to you, but today's high was 97.51.5, which took that out. Therefore, you're not in a trend anymore. You've got a lower low and a higher high. So much for trends. One of the things I talk about regularly is what I'm able to do in the morning because it's so different than these videos you're seeing. And what I'm able to do is by 6:15 in the morning, I'm recording. That's 6:15 Central Daylight Time, AM. And the charts will look like this. They're going to have more lines on them than the charts you're used to seeing here. They're going to include window envelopes, Bollinger Bands, some of my other tools that you get through. I will review 40 futures market charts and typically 3 to 5 or more ETFs for you. You have a cup of coffee. I hope you look that good at that hour. And away we go. And I cover them in the same sequence, but we've added another feature. On this side of the chart, right over here, you're going to see all these things listed. You can hit the one you want. It'll take you right there, and away you're going, just to the markets that you want to see. If you want to see them all, away you go. I've made that easy. Now, what else am I able to do? Because this requires a subscription to it, what happens is I can change my whole attitude. I can talk more about the chart action, what I think the pros are doing back and forth. Because it's early, I am already up to date on what's going on in Asia and Europe. Intentionally, this is 6:15 in the morning that I'm doing this. It's before U.S. economic data comes out. If there's something important, I'll discuss what the trade is looking for, but I'm going to start throwing out trade ideas galore at you. And they're not going to be like you see here. Here I have to be generic. I'm bullish, I'm bearish. Here I'm saying buy here, sell there. Here's your stop. Double up. Do this, do that. That's what I'm able to do. And yes, it is a subscription. It implies money. I want 26.5 cents a day for you to try this out. 30-day commitment. After that, you don't like it, quit. From there, you can decide what to do. You can go month to month. That's up to you, $15 a month. You can buy a 1-year subscription for $156. You could just quit. That's up to you. I think that if you're sitting there like this, what am I going to do today? I've got this bias in the market. I'd like to see what somebody else that I respect thinks about the charts. Now remember, I'm there. I'm not seeing you. I'm telling you just cold stone what I'm seeing on the charts. Give it a try. I'm Ira Epstein. You have a good day. You can call us. If you go to our website, it's under Research or Education, Morning Subscriber Video. Have a good one.